Good morning, everybody, and this is your S&P 500 day trade setups for today, the 1st of January, 1st of February. Where has January gone? Anyway, we are starting off on the monthly chart. Just want to highlight one thing here. Big monthly green bar here, crossover of my moving averages above the trend line. Monthly close outside of the flag. That is my flag there. Channel, should we say? But anyway, it's a channel from a big move up, move down. What is the next logical step on a break of these levels that we have above us, which is basically 4100, is continuation onwards and upwards. So at the moment, this is a monthly setup. Probably take a while before it gets going, but the reality of what we're seeing here is this was a 2-year move up. It was a 1-year pullback. So, you argue a 2 to 3 year move to the upside, which we should be aiming for 60,000. So anyway, bookmark the video. Let's see what happens in 2 years' time, whether that does materialize or not. Let's get this. Let's pay attention to what we need to pay attention to today. So remember, there's still a lot of data coming out. We still have the Feds coming out tonight as well. And then we've got non-farm payrolls on Friday. So there's a lot going on. For all intents and purposes, we are sort of stuck in a zone of resistance here, just below 4100. And what's happened this week is down, big pin bar off the 4000 level. Just as we expected yesterday, that 4000 was going to hold trend line. The moving averages are up. Oscillators not helping us much, but they have dropped ever so slightly, and they are separated and they are starting to cross over. So we've got a pin bar off structure with a confirmation bar, but straight into a zone of resistance. So a little bit skeptical about it. Could be a trap. There is a probability of that, but it could also be a bullish setup that is starting to brew, that somebody knows something and they have started structuring their positions ready to take on the new year. So I am of the opinion you need to ignore the noise. Just stop watching all the bulls and the bears screaming their high probability setups and why the market's going to crash to zero or why it's going to fly to 60,000, and focus just on what you're seeing on the charts. Focus on price. Price is going to tell you exactly what's going on, and keep your stops really tight. So if you look at this on the 3-hour, you can see it's been a gradual move down. And normally, if you're heading towards a trend direction change, so the trend has been up, normally you see the red bars fall very quickly, and then the green is laborsome to the upside. This is not happening like that. So you can see red has been laboring to the downside to come and test this previous breakout, and then green has been 3 solid 3-hour bars, basically within 9 hours. Back to the upside of the week. So it took us 9 hours up and how many hours down. So that is normally what happens. You see what I mean here. So they're kind of consolidating, laboring, and then big moves to the downside. That's typically what happens. So for me at the moment, this is bullish. It's a retest. This is looking like a flag at the moment on the hour. So you can see what happened yesterday. Nice inside bar on the hour. Oscillators group to downside, off structure, a little bit below all the moving averages. But as I say, when the higher time frames are pointing in a direction, you need to go with the higher time frame. So it doesn't matter what the lower time frames are saying. You can still take the lower time frame shorts that would have been on the 5 and 15-minute chart, but those are scalps. Came back also to close gaps onto structure, close gaps, and then came back to close this weekly gap here that we had in place. So that's closed now. So as far as I'm concerned, this move is really strong. We should be looking to continue that move to the upside. There's no reason not to. Look how strong we were into the close. So people were buying going into the close of the market last night. Why? You've got to ask yourself why all the time, because that to me is fairly bullish. If you look what happened on Friday, people sold off going into the markets and one hold over the weekend. Monday was kind of down, all over the place, and then we get down to structure, and then immediately the buyers step in and add to their positions going at the close. So oscillators have now sort of eased off a bit on the 50-minute. We've crossed over the moving averages. My opinion here is you're looking for opportunity to buy, and it'd be wise to just take a 1 hour level. So there is the current breakout. I don't trust that one though. Let's see if there's anything else. Nothing really else there. So that's the first zone. But we do have gaps here, so I'll put that level in as well. So let's get back to 15 minutes. Right, so we do have a little gap here on the hour. Can't see it in the 15-minute, but you will see it on one of the lower time frames. So that to me would be first price. That's 40.44, and lo and behold, there is a little 15-minute level here, and that's probably 40.50. Yep, 49.5, 40.50. So that is the next structure. I think this 4,000 has been tested properly. So next logical area would be 40.50 if we can test it. If we can't test it, then I would expect us to treat this as a flag. So then what we'd be looking for is a break, a retest, and a move to the upside. And 4,100 is our ultimate target. We need to get above that. So we're looking for a weekly close above that in order for us to start getting proper bullish on the higher time frames. So right now, that is what I'm looking at. A little bit skeptical about trading it during the European session. I think you're better off trading the DAX and trying to second guess this. DAX has got some really good bullish setups as well. And you've got some data coming out. You also got the Feds coming out. So you kind of want to stay away from this when the Feds are releasing their noise. You can trade up to sort of an hour before the Feds, or 15, 20 minutes before the Feds come out. But then I'd get out of the market. I wouldn't be wanting to hold a position either way. Because what you'll see happening is you'll either have a massive gap up or a massive gap down. And you're going to try and chase that move, and all that's going to happen is come back, stop you out, and reverse and head off in the opposite direction. So it's going to be really volatile until it finds its feet. So I just leave that for the algorithms. They're way quicker than humans. Let them trade that nonsense, and you just watch the fireworks. So that's kind of my view at the moment. I'm looking to build a long position here, from market open to just before the Feds, probably opportunities there. But what you could also see is we just go sideways in between these levels here until the noise comes out. But what I'm seeing here could be a trap, always a possibility, but I don't see that at the moment. This is looking like somebody in the know. This is just looking like somebody knows what's happening and it started loading up positions and waiting for the big break to the upside. That's what it looks like to me. Anyway, that's kind of my view today. I am sit on hands on the US markets personally until the noise is out the way, but definitely looking at the DAX, and also Euro USD is looking really interesting for a break to the upside. So that's kind of where my focus is right now. Hope it helps, and we will catch up with you tomorrow morning. Whatever you do, stay safe, keep those stops tight. Cheers for now.